Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. But, folks, mostly it is to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool, folks, that I call the greatest force in the universe. If I were to ask you, and I am going to ask you, what do you think is the greatest force in the universe? One word. One word, folks. That word is time. Time is absolutely the greatest force in the universe. Now, would you ever choose to fight time if that's the greatest force when you can have it on your side? I really think it's very pertinent with regard to today, with regard to the action that we've seen here in the markets. Would you ever choose to fight time when you could simply have it on your side? Who wouldn't want to harness the great river of time that flows through all of life? Can't you just feel it flowing through your veins, folks? Why wouldn't you want to use this power of time to generate power in every area of existence in your life, to turn your turbines, folks, into your hopes and dreams, to change every aspiration that you've got with just simply a thunderbolt of lightning and electricity? Time, folks, it's the greatest force, and it is a beautiful thing. There's only one way, though, to make time work for you and not against you. What would that word be? How can you make time work for you? What would it require? Absolutely, you are dead on. It would require patience. And when we take a look at the markets that we're going to be talking about today, you absolutely need patience. It's a slow crawl up, no volume. And, if you're not patient in life, what can happen? You can make some of the largest mistakes by just simply not being patient. In one word, folks, it's called impatient. And, so you don't want to be, well, it's called patience, but what you don't want to do is you don't want to be impatient. Because if you're patient, folks, with your journey, you will get everything that you want. You just need to put time on your side. So let's go take a look at these markets out here. You can always give us a call at 877-927-6648. They certainly require patience out here. Right now, if we take a look at what's going on in the marketplace, relatively flat. Of course, you've got the Dow trading up about 25 points. It's been doing that on and off really since all evening. I think maybe at 9 o'clock it was up about 28 points or so. The ES Mini is up about 2 1/4. It's trading out at 1406.25. What the ES Mini here is doing, what it has been doing here for a while. Well, really, if you take a look at the ES Mini, it's just the last 3 trading sessions where it has been tinkering with the swing point high. I'm not talking about May 1st. Absolutely, it's trading inside that May 1st swing point, but it's really tinkering with March 27th. The low of March 27th, 1406. What did you do here in the ES Mini? We're looking at the daily chart if you're watching us on TigerTV, and you can do that, folks, just simply by going to the homepage at tfnn.com. And, of course, while you're over there, just go a little bit further over on the right-hand side. You'll see some nice red diamonds. You can bookmark Tiger TV on your mobile device, on your iPad, your Android device, and that way we're always one click away from you being able to get us. If you're listening on the radio, thanks so much for doing that. Maybe most folks are listening to us on tfnn.mobi because they've got that bookmark on their mobile device out there. You can always catch the archive of this show on Channel 9. And if you're watching us on Tiger TV, one of the things that you're seeing is 2 trading sessions ago, so that was on Tuesday, August 14th. You had the ES Mini get up to a high of 1409, closed out at 1401.50. What was that doing? That was rejecting that swing point, that swing point high going all the way back to March 27th, 2012. Again, the low of that is 1406. What did you do yesterday? Yesterday, not you, but the ES Mini got up to 1405.75. Couldn't get all the way up there. And today, it did. The high so far has been 1407.75. You're at 1406.25. That is really, now it's also trading inside May 1st. And the top of May 1st is not that far off. It's 1411.75. So I believe that if we take a look at it, it's going to be today or tomorrow. And all you need is just to wait a little time, is just to be patient, that what we should see is we should see the ES Mini tag the high, 14.1175. Now, it could do it overnight. Could easily do it, if it doesn't do it during the trading session today, could easily do it overnight. I think what we'll see is we'll see it get up and over 14.1175, close back below the 14.06 level on the ES Mini, the March 27th there. And we'll go switch over and take a look at the index here in a minute, because I can give you the prices on that as well. Close below that, do it all on lighter volume, and that, folks, if you were patient, that gives you your setup to actually go short these markets while you have gone up on basically fumes out here. That's if you like to be able to play the market short. If you don't, what you want to do is you just simply want to make sure that you keep your stops tight, depending on whether you're a long, whatever time period it is that you trade upon. Now, if you get up and over and you close inside March 27th, what does that set up? That sets up, you've got to be even more patient, and more patient means going up on the ES Mini and testing the 14.1975 level. So let's go switch over to the actual index. Let's take a look at the S&P 500, because not as many of you folks trade the futures or actually look at the futures market. Of course, it is so helpful to understand what's going on inside these markets. So if we take a look at yesterday's action as an example, yesterday in the S&P 500, you get up to a high of 1407.73, close out at 1405, and, well, let's see, the exact close was 1405.53. If you take a look at the low, now this is April 2nd. The swing point out here is April 2nd that you're looking at. That low, 1404.46. So you closed up inside there. You closed inside May 1st. The top of May 1st swing point is the price point of 1415.32. That is the area that it wants to tag. So far, the high that it has made out here has been yesterday when it got, 2 days ago, so Tuesday, when it got up to a high of 1410. You just have to be patient. What has the S&P 500 done off of the June 4th area? Well, I'm glad you asked me that. It has made an A to B equals CD. So that pattern is completed. You've got price just hanging out around here. In fact, if I switch this over to a daily chart, let's see, not daily chart. We're on a daily chart. If I switch this over to a weekly chart, what is it? If we take a look at this candle right here, what is that? It's a doji candle. So you can see it's really been a week where you've needed patience. You've got total equilibrium, if you will, between the bulls and the bears out here. You're going to need some patience here for, I believe, at least another day, day and a half coming in to tomorrow. If we go take a look at what's going on around the world, let's take a look at that. We can start off over here in, so we'll see what first pops up on my screen. Nothing. So let's go take a look at the DAX. The DAX, too, also requiring patience. You can see the DAX here setting up a 0.786 Gartley sell pattern. Now, the beauty about this pattern, folks, is that if this fails, this pattern here fails, not only will the DAX travel up to 71.94, let's go see if I've got this marked up here, but what happens with a 786 Gartley pattern is when they fail, and that's assuming that you get some type of conviction behind the move. If it fails, it'll turn into a butterfly. You got to love it when Gartleys turn into butterflies. That would send the DAX up to 75.42. However, you've got the 0.786 Gartley in play. That's the pattern that you would need to trade. You can see it has just simply been camping out in this area here going back since August the 7th. What have you needed? You've needed patience, folks. Patience. Time and patience. Of course, if you take a look at 75.42 in the DAX, where would that take you back to? That would take you back into the May 2011 time frame out there. But it's got a while. It's got to prove itself, and right now it doesn't have the volume behind it to prove itself. If we continue taking a look at what's going on around the world, let's go over to the Nikkei. The Nikkei, why? Because that was up almost 2% last night, up 1, and let's call it 1 9/10%. The Nikkei having some conviction behind the move here. The Nikkei coming back and testing and closing inside the July 5th candle out here. That sets up a test of 91.30.54. If we take a look at the ABCs out here on the Nikkei, you'd start with the low going back to July 25th when it was priced out at 83.28 and a little bit of change. Makes a B point on July 31st, makes a C point a couple trading sessions later, August 3rd. What you can see, it's powered through the 1 to 1.272 area. What I expect the Nikkei will do is get up in about the 91.68 level. If it closes above July 5th's high, 91.30, then the Nikkei will likely be setting up a butterfly pattern. You say, well, Steve, what's that look like? Let's go draw it in. Let's actually do it. I haven't done it. And so now, if you're drawing butterfly patterns or you're drawing Gartleys, one of the easiest things, or one of the things that you want to be able to do, is just simply take a look at the swing points that are out there. It doesn't matter what chart we're looking at. So, just simply because we have the Nikkei up here on the screen, you can use this for every chart. Now, what we're taking a look at is we're taking a look at expansions of swing points. Those expansions being the swing point from July 5th, the high out there, to the low of July 25th. Now, the 1.272, so on your ruler you want to have 1.272 and 1.618 expansion levels. The 1.272 expansion of 93 of those two swing points is 93.48. What does that mean? That means if you take from the high to the low and you take that dollar difference, multiply it times 1.272, add it to the low, that'll give you that price projection of 93.48. So you can do all this on your own, on a piece of paper, with an Excel spreadsheet calculator, and you can identify where these areas are. It's just math. So if you don't have a tool like this, you ought to be able to, you can just simply identify where you've got these major intersections, these major reversals, major turns out there. There's always swing points within swing points. The ones that you want to start focusing on first, though, are the major swing points. Those are the two that we've picked out here on the Nikkei chart. Now, what does the butterfly pattern look like? A butterfly pattern, I'm going to simply, because I've got this wonderful tool on the Ensign Windows software, we can draw what that actually looks like here on the screen, and there, voila, is your butterfly. Now, once you have that drawn, what you want to do is you want to keep going back to the left side of the chart, and you want to see, well, what is that possibly going into? And you want to start taking a look at, again, major swing points. So if we take a look at the Nikkei out here, and I'm not saying this is where it's going, but if you take a look at the pattern setup, April 27th, 2012 is a swing point high. You go from that high to the low, what you will see is you've got a 0.786 retracement of that swing point coming in with a butterfly cell pattern in that same area. That is on the Nikkei, folks. 877-927-6648. That would be what? Then you'd have a butterfly and a Gartley cell pattern all in the same place. We'll be right back, folks.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pezzavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And today is the 35th anniversary of the passing of the king out there. And so I thought maybe just since we need patience because the market isn't really doing a whole heck of a lot out there, that we could go take a look at all those stocks that somehow have king in them. Now, I only know of one that comes to mind, so maybe those folks in the den, or maybe you listening on the radio or watching us on Tiger TV, you can give us a call here at 877-927-6648. Maybe you can help me out. You can come up, we're going to take a look at King Dollar, right? So we can take a look at King Dollar. We'll do that. We're going to take a look at the king of beers. Maybe you can come up with some other king stocks out there that we can look at. And so let's go take a look at Budweiser, Burger King. I just give me the ticker symbols out there, and that would be a little bit easier. So let's go take a look at Budweiser, the king of beers out here. And let's start with a weekly chart. Now, you had Budweiser close out yesterday at $81, and it's Anheuser-Busch, but their stock symbol is Bud. And so if we take a look at the weekly chart closing out at 81.13. Now, if I went back further on the chart, it had already completed a 1 to 1.272 A to B equals CD, and then just simply moved sideways for a period of time. And now what it's doing is making another A to B equals CD up. So on the weekly chart, your A point is going to be the week of September 23rd. The low is $49.08. And you can see the week prior to that made a nice weekly bullish engulfing candle out there. So that's a beautiful thing. And so your B point on this is going to be, that I'm using here, is May 11, 2012, when it trades up to $75.08. So it's got quite an A to B leg here. But actually what I really wanted to say was the retracement off of that A to B leg is very, very tiny. In fact, let's go measure. It looks like 0.382 or less out there. So if we go take a look at that, you can see it is at 0.382. In fact, if you look at that, folks, you can see that the actual 0.382 retracement, $65.15. It actually got down to a low of $64.99. Oh, you got to love that. Now, when you only do a 0.382 retracement, what I want you to do is I want you to take out your little rubber band, because I know each of you have a rubber band on your desk, and just to understand the power behind that, if you took that rubber band and you just wrapped it around your finger just like I do, and you back it off only 38%, is that going to have more or less energy than if you backed it off 61% or 78%? Absolutely. A lot more energy. And if we take a look at the price here as it's traveling up that C to D leg, what you can see, it's traveling also on the inside. So the C to D leg having more energy than that A to B leg. Just a 1-to-1 A to B equals CD, folks, on Budweiser. This Bud's for you. Whoops. Let's see here. It takes you up to the price point of $91.57. It's traded out at $81.13 right now. But this is more likely going to do a 1 to 1.272 A to B equals CD, get up to the $98 level. Now, it also came through that B point on what? on the weekly chart, did it with wide price spread and conviction. If you take a look at this candle, came through on June 29th. The low of that candle, 71.52, the high of 79.65. Volume, 12 million as it was passing the B point with only 5.8 million shares out there. Let's go to our first caller. Let's go to Rich in Orlando. Rich, thanks for calling. Thanks for holding.
Sure. Morning, Steve. How are you?
I'm doing great. Yourself?
Not too bad. Not too bad for a Thursday morning.
Good, good. What did you want to look at here?
Well, it was this TWM.
Okay.
Okay, I've got a position at like $30.16.
Uh-huh.
And it seems like it's just sort of bouncing off of the bottom here, and it looks like it would be okay, but I just don't know.
Okay.
So that's what I'm calling, to get your analysis of this.
Okay, so first thing I want to do here is I'm going to go ahead and pull up the TWM here on my position size calculator, because what I want to first do for you is, let's first go ahead, just so I can find it here. Oh, come on, what's going on here? There we go, okay. What I first want to do is I want to see what the average true range is on this, because if you are in this equity, you want to understand what the volatility of the last 10 days has been. So right now, that's 77 cents. So, wherever your stop is, if you want to stay in on this trade, you need to be at least 77 cents underneath where it closed yesterday, and I would recommend some other expansion of that, either 1.272 or 1.618, depending on where you are at. Now, what the first thing that I'm going to do here is take a look at the Russell 2000 futures. And what the Russell 2000 futures has done is it is really tested the descending tops line. And where I'm going with, Rich, I'm going from the high out here of March 27th. The high out there was 850.60. The next touch point on this is going to be the high of July 5th. So I know you're watching on Tiger TV, and you can see that in the overnight session, it basically got up and held that area. I would stay in the TWM until that level gets broken. If it doesn't get broken, you're in the right trade. I think you're in the right trade, by the way.
Thank you. Appreciate that.
You bet. Thanks for calling. 877-927-6648. Let's see here. We've got the Dow futures up about 20. Give us a call, folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. Nobody really out of the gate. You got the Dow up 7 points. S&P's up 2, composite up 7, small caps still stuck in the gate out there, totally flat. We got Microsoft trading up 12 ticks, Intel up 14 cents, Google down 46, Cisco up $1.46 after earnings report yesterday. We'll take a look at Cisco, see where that's trading into. Apple totally flat out here right now, and it is the 35th anniversary of the King's passing. In fact, folks, if you stick around today, Larry Pesavento from 12 to 1 is going to teach you how to make the King's favorite sandwich out there, peanut butter and bananas. Deep fried, I believe, or fried. Now, if we take a look at, in honor of the King, we're looking for stocks that have got King associated with it because the markets are just simply flat out there. And so one of those thrown out there by one of our members in the Tiger's Den. And, folks, if you haven't tried the Tiger's Den, go to the homepage of TFNN.com. You can do that for 30 days, risk-free. Absolutely fantastic group of folks inside there. Burger King. BKW is a ticker symbol. Now, Burger King used to be a public company. They were public from the, I think, like 2006 to 2010 time frame, and they were bought out by, went private with a company out of London, I believe, 3G Capital, and then just recently started trading back in the New York Stock Exchange. They actually started trading here on June the 20th. Now, wide price spread for sure. $14.40 all the way up to $16.21. Now, you might not say $2 is a wide price spread. Take a look at that candle on that day. Of course, those folks, that was the high actually came the following trading session when it got up to $16.31. Traded as low here as $13.84 just a couple trading sessions ago. Not a lot of information here on Burger King other than to that I can really tell you, but thank you so much. Whoever it was, I apologize for not paying attention, who gave me Burger King in the den out there. Well, there is another King for us to go look at, isn't there? Let's go take a look at King Dollar. And the King, he'll be in here in just about a half an hour's time when we do the Money Master show. But let's go take a look at King Dollar out here, the U.S. dollar index. We take a look at that here. We know we've had that nice 3 drive to a bottom pattern. So you've got some support out here at the 82.07 level. Right now you've got King Dollar trading back at 82.54. You would expect that. You would expect it to have pulled back. Why? Because if you just simply measure the last set of swing points, that's coming from the swing point of August 2nd, the high of 83.61, all the way down to the low of August 7th out at 82.07. The retracement that it completed this morning was what? A 0.618 retracement. So once you do that, and it's done that now twice, so that area has held. It did that retracement on August 10th as well, got back up there today, let some people off the elevator. You know, it's moving back, and why is it moving back? Well, you got King Dollar moving back primarily because of the euro. So let's go take a look at the Queen. You know, what King would be without a Queen out there. Let's go take a look at that currency marketplace. You can see here the euro having a strong session today. Why, I don't know, but it most certainly is. Now, if we take a look at the Queen here, you can see this has got a nice little butterfly sell pattern, or better, butterfly buy pattern, I should say. So how did that butterfly buy pattern, it had two of them really coming together at about the same price point area. How did that butterfly pattern know that Draghi was going to go out there and save the world? So you had one heck of a short covering rally, one heck of a nice bounce, got up into the high here on August the 6th when it got out to the 1.24420 level. Then what did it do? It pulled back as it should, got into that 0.382 level. That is the level here that is held as support at this point in time. Let's go take a look at what's going on here on more of an intraday chart. So let's go take a look at the 30-minute chart here. And on the 30-minute chart, the euro must have liked the either the housing numbers or the unemployment numbers, which, by the way, I think housing starts were down about 1% and unemployment claims were up maybe a couple thousand. Of course, I think they didn't get the number right exactly last week. They never get the number right. But let's go take a look at an intraday chart here and see what the euro is doing. We can see the euro had made a 1 to 1.272 A to B equals CD down. When you take a look at the retracement of this, we knew that it was going to do more than 1 to 1. Why? Because if we take a look at the retracement off of the highs, we're looking at a 30-minute chart out here, folks. We're coming off of the high here at about 4:30 in the morning on August the 14th. Makes a low. The low that I'm using is at about 6:30 in the evening on August the 14th as well, down at 1.23154. If you just simply use your retracement ruler on that, what you will see is the euro only made a 0.382 retracement. If you only make a 0.382 retracement and you got your rubber band out there, are you likely going to have more or less energy? You're going to have more energy. And I say more energy than a 618 or a 786. So what can you expect? You can expect more than a 1 to 1 A to B equals CD. That 1 to 1.272 level, folks, that price point, projection 1.22543. What you had the euro actually do at 3 o'clock this morning, 3 o'clock this morning, gets down to 1.22549. You got to love how this works, folks. This pattern, this A to B equals CD pattern, this was drawn yesterday. If you didn't hear me on the archives, go listen to yesterday's archives. Yesterday's archives, we said it was going to do more than a 1 to 1 A to B equals CD. That's exactly what it's done. Now what is it doing? It is doing a retracement of that overall pattern. Let's go take a look at what that retracement level is. So let's come from the high, that A point, all the way down to our D point. And right now what you can see, it's done a 0.618 retracement. Now, if you take a look at those last couple of candles out there, we're looking at a 30-minute chart. Are you coming into it with conviction? I'd have to say absolutely. You know, if you take a look at that 9 o'clock candle, you most certainly have out here. And so what we should expect here in the 9:30 candle took a little bit of a breather. But you know, you're trading up towards the session high here, you know, during the last 10 minutes. And, you know, this area here at the 0.618, it should let some people off of the elevator. If you were in this trade, if you went long this trade as you made that 1 to 1.272 A to B equals CD, you've got some nice profit in it. Here's where you would book some of your profits. But you would be looking for this pattern to move up to that 0.786 level, just simply based on those candles out there. But all you need to do, folks, you now have time on your side because you know that the market has retraced back to these levels, and all you have to do is be patient. If you were long this trade, you just want to wait for a reversal sign, some type of candle pattern. You might see it on something less than a 30-minute chart. You might see it on something more like the 10-minute chart, maybe the 15-minute chart. If we just go, let's just keep this since we're on the half hour. Let's just cut this in half. Let's go take a look at that 15-minute chart out there, see if there's anything else that we see. we just see that it's also making that move of a move, right? So now, so this is actually kind of cool. So you can see now off of a set of swing points out here, if you are watching us on Tiger TV, you can see not only did you do the 0.618 off of the swing point that we were looking at that started our A to B equals CD, but there's another swing point out here on the 15-minute chart where you are at the 0.786 retracement. So, and what you can also see is the expansion that you did here. See, this says 1.67, or if you can't see that, it actually says 1.67. Is 1.67 close enough for you to 1.618? Absolutely is. So if you're in this trade, this is where I say you'd either be making a tighter stop or you would be booking some profits. Why? Because you are coming up against an area of resistance here just simply by using your sacred geometry. That, folks, is a beautiful, beautiful thing. Let's go take a look at some of these stocks here that are popping and dropping. You've got Blythe Inc., B-L-Y-T-H. BTH is the ticker symbol. They're up a nice 21%. What is driving Blythe Inc. out here? Let's see here. Do they... is this maybe just an IPO? Has this only been trading today? Let's go find out. BTH is the ticker symbol. Maybe. No, it's not. So gaps up. So let's go take a look at this. Gaps up nicely. I don't see what is... You know, you got to love it when you pull a chart back here. This, I was saying it gapped up nicely, but this chart looks just simply... Let me just refresh it. Let me just make sure that we are looking at everything. Okay, now we got that. Okay. So the stock chart does look pretty good out there. Good thing that I refreshed the screen out here. So let's go take a look at Blythe Inc. Right now it is gapped up over the swing point from April 27th. That swing point had 257,000 shares. Today, so far, what it's already done is 404,000 shares. So that is a B point, most certainly, of an A to B equals CD up. Let's put this on a weekly chart, then maybe take a look at it on a monthly chart, get a better idea for what this equity here is doing. It has been traveling in a pretty nice uptrend here, making higher highs and higher lows. Let's go take a look at the retracement off of the most recent swing point high. You'd go back to June 1st, 2007, because we certainly have some AB equals CD patterns out here. So we can see here so far what it's doing. It's coming up. It's trying to make a 0.786 retracement. That would also be a 100% move of a move. That takes you back into the December 14th, 2007 area. Let's just simply see what the tool here picks up as the A to B equals CD as we would draw that pattern. There we go. So there's your B point out here. Your B point is coming in on the weekly chart. It's going to be the week of February 21st, 2010, 816,000 shares. Let's just simply go ahead and draw this. Let's see if it came through that area. This is a just simply a normal Gartley sell, or whether this is a Tiger Gartley. And so we're just simply going to come down here. We're going to take a look at the volume as the B point was being passed, and really since then as well. If we take a look at that, well, I just deleted that. Let's go back to the weekly chart out here. There we go. So let's redo that, since that didn't work real well. Okay, so now we're going to go back to the B point again. That's the week of May 21st, 2010, when it did 816,000 shares. So not a very liquid stock out there, that is for sure. Okay, so we can see as it came through the B point here, it did come through with volume, attacked it several times with volume, and so it's going to go ahead and complete that. It's at least going to travel up to 48.93. You're at 44.51 right now. You've got Cena Corp. That is up $5 and change. Priceline up $5 and change. PetSmart up $4. Children's Place PLCE up $4 and change. F5 Networks FFIV, they're up $3.70. Coinstar up $2.69. I believe that is just coming into an area where they had a downdraft. We'll go take a look at Coinstar. You've got Perigo, PRGO. That is down $6. That's off about 6%. NetEase, NTES, off 10% this morning. Ellis Perry International, PERY, they're down 18%. Excuse me. Let's go see if there's some news behind that little haircut. There's another bigger haircut out there, Idenix Pharmaceuticals. That's off 30%. But let's go take a look at Perry Ellis. So Perry Ellis here, they had a quarterly loss of about $2.5 million. Excuse me, I got to grab a drink here. Here we go. Thank you, Al. Sorry about that, folks. Something flew into my throat, and I just simply swallowed it. A little piece of dust. Must be magic dust, I hope. So, yeah, Perry Ellis, they had a loss of $2.5 million versus $1.84 the prior year, so their losses are growing. Revenues here not growing, $208 million versus $214. So no wonder they're struggling a little bit. PERY is the ticker symbol out there. So let's go take a look at PERY. Moving down this morning, gapping down with volume. And let me just refresh my screen here. Boy, this thing, what it did was it looks like it came back into a breakout area. But let's go just simply make sure as we pull that back up here on the screen. So the stock that we're looking at here is Perry, P-E-R-Y. Now this thing here gapped down with major volume. Did it November 16, 2011, closed out at 2140. Gapped down the next day with 2.5 million shares. Went down to a low of 1355. So the low here looks like it may have been very close to being tagged. The low of the breakdown is the low of November 16th. That low was 2140. So as we draw our line across the screen here, you can see how the stock came back up into that area. Now, even the breakout candle, that had 137,000 shares. As you were getting back up into it, you're doing with 108,000 shares, 63,000 shares. So this morning here, gapping down, going to be taking on the swing point, its most recent swing point of August 2nd out there. That had 44,000 shares, a very illiquid stock out here. However, it's done it with, it's gapping down with 110,000 shares this morning. This is going to come all the way back and test the low. So it's going to come down into the $15, $13 range. It's trading at $18 right now. Let's go take a look at Walmart. Walmart out with earnings this morning. They beat the bottom line and missed the top line. So let's go see how Walmart here is trading. Walmart down this morning. It's at $72.31, and it does have some volume in this move here. So let's go take a look at Walmart. We'll take a look at it on a couple different time frames out here, because we know that Walmart got over a long-term swing point on the weekly, on the monthly. In fact, let's first start off with that. Let's first start off with the monthly chart out here. And let me just erase some of the stuff out here. So Walmart got over the December 31st, 1999 swing point, $70.25. That should be the first sign of support on this. It's trading out right now at $72.28. And that level is going to be very important to watch. $70.25, that's the number. I would write that down on a sheet of paper, folks. 877-927-6648. These markets require just but one thing today, just like life, a little bit of patience. Things are flat out there. You got the Dow off 7, S&P's flat, Composite up 4 points, Russell down 2. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Everything pretty much flat out there. You could do some water skiing on the Dow, on the S&P. The Russell 2000, you'd have a little bit of a wake in there. Composite's up about 6 points right now. And when we left before we went to the commercial break, we were taking a look at Walmart here. So we got Walmart. We were looking at the monthly chart, and I said what you should write down on a pad of paper, which I did. I wrote it on my pad of paper, $70.25. Why? Because if it gets below that area, closes inside there, it gets back inside this long-term consolidated range out here, folks, and that range goes all the way back to December 1999, the high of 70.25 and low in the $40 area. So a heck of a nice range out there, a heck of a nice trading range. Now, let's go take a look at what Walmart here is doing on the daily chart. So we've written down $70.25, and we'll kind of seek out what that $70.25 level would take us to. Well, how about if you just simply go back to the last high volume day that Walmart had? That will take you down into July 19th. So that's a beautiful thing. So you've got Walmart trading inside July 19th right now. We'll just simply go ahead. We'll keep following this here over the next several trading sessions. So I'm just simply going to mark the lines out here. That happens to be the last time when we saw any kind of volume inside Walmart. And if we take a look at the volume that I'm talking about on that day, we're talking about volume of 17 million shares, 16.8. So far today, and you've only been trading here for 25 minutes, you've done 5 million shares. So you've done 5 million shares coming into that 16 million shares. Also was a swing point. So this is where the line is drawn in the sand, and it's really at the bottom of that candle. You get down there, you test that area on less than 16 million shares, then actually, quite frankly, because we've got a confirmed A to B equals CD up, that actually may set up a nice trade for you on Walmart, WMT. That's why you want to be paying attention to that equity for sure. If that area gets broken, where will it then start traveling down to? Well, The next area of volume is where Walmart broke out on May 17th, 2012. That's all the way down in that $60 area. So very important to watch this candle here, July 19th. So you can write that down on a pad of paper as well. July 19th, and you're looking for $70. And really, in this case here, the candle 70.23. That is the area that you want to watch. Let's go take a look at Cisco, see what Cisco is doing out there. I believe they increased their dividend yesterday, citing that the best thing to do with their money was to give it back to their shareholders. What's that say? Got Cisco gapped up this morning here. Let's go ahead. That's after it made a 1 to 2.618 A to B equals C to E down pattern. Let's go ahead and clear the screen here. All Cisco appears to be done. Let me just refresh the screen here before I say the next sentence. Let me just make sure. So Cisco, all that Cisco is doing is going back into the last time that it gapped up, folks. So Cisco actually going back into a short area. Now it's an $18 stock, so you wouldn't short Cisco. And I'm not even suggesting that you short Cisco. But what it is doing here, it's ideally set up from a trade standpoint, from a chart standpoint, what you wanted to see it do. The gap down that Cisco had was on May 10th, gap down with 198 million shares. Today it's gapped up here with 40 million shares. So you've got good volume here. It's into that swing point, but you can see it's really trading off of its session highs at the moment. It looks like Cisco here wants to travel lower. However, let's go into just a quick intraday chart here. Only been trading for 27 minutes, but let's go see what it is doing. You can see on all the volume on this coming in during that first 5 minutes of trading. Those folks wanted their money back. That is for sure. Folks, thanks for being here. Stay tuned. Tom and I will be up next. Then we go to Kate Stalter, as we do on Tuesdays. Larry Pesavento, Daryl White, David. That's David White. We go to Daryl Martin, David White, Ken Shreve, and then the Tom O'Brien Show from 4 to 6, folks. Thanks so much for being here. Maybe my clock is off just a bit. No, we go. There's our music. You got the Dow is very flat, up a point. S&P's up a quarter. Have a great morning, folks, and look forward to either seeing you in a few or seeing you tomorrow morning. Take care.